Good turnaround Tuesday, everybody. How's everyone doing? How are my trading warrior brothers and sisters today? AJ, how are you? Blake, Mike, Steve, Ingmar, how are you? James, Ryan's back. Hi, Ryan. Bran, Kman's here. Steve Hibbs, welcome to Face. Your first time here. Hugo, how's it going? Parth, how are you? Hi, Laura. Everyone doing okay? All right. Take a look around. Dollar's giving back a little bit here. And gold is threatening a breakout right here. Here it is. Okay, everyone see that we're threatening this triangle line right now. So 380, if we could start clearing that on a closing basis, that's going to look pretty good for continuation to the upside. I was pretty surprised how Euro gave back as much as it did yesterday. Early in the day, I thought we were going to have flags. I guess the market tell was what Bitcoin did Sunday before the markets open by giving back everything from Friday. It was the first one to do it. Then Euro almost did it, and S&Ps, are they going to try and take out Friday's low all the way down here? So I don't know if those were omens that was what was going to happen. Um, but I'm currently short the dollar from yesterday. Uh, the rally went further than I thought, but I still think that we could get another shot down to challenge Friday or Monday's lows.
Dale, one of the weird situations that we're in right now, and I was like you, I played the euro to the short side yesterday. I turned around and went long at 1608, I think,
Yeah,
late yesterday afternoon, and then the FOMC. Well, I'm sorry, let me rephrase that. President Trump said I'm going to fire Fed's cook, and then the euro in Asia screamed up to 116.50, and then I was like, well, shit, we were in the chat rooms yesterday evening in Asia, and I'm like, well, it's better to be lucky sometimes,
yeah,
in a situation like this. I got out of my euro at like 116.40 ish, and just to keep it off keep it off the board so I could sleep at night type of thing, because I was kind of aggressively long the euro down at near 116 at 116.08, I think is the price now. but
yeah,
but but the reason why I'm saying this is now the dollar is kind of, we're stuck in this range, but we're in a weird situation with the Fed, or with Trump trying to fire
yeah,
Cook, and Cook, she's saying I'm not quitting, and you don't have you don't have the right to fire me. And so now this we're in a weird situation now, in the dollar.
yeah, yeah. So they're the market's taking it as any interference with the Fed is bearish a dollar.
Well, it's credibility, right? It's like, uh, and then it puts the Fed chair in a really weird spot, and the FOMC, because do you take in, her, like, what she has to say from on in the board of governors, when she may or may not actually be a governor now? Like, it's a weird situation, man. Like, something
Yeah,
that we've never dealt with, and I think the market's just trying to make, make sense of it all. And I'm not sure what Ryan and Kman have to say about the whole situation, but because I didn't get a chance to listen to the entire flow show today, but it's a weird predicament that we find ourselves in as market participants, and what we want to do with the dollar.
yeah. Well,
Yeah,
the markets don't like it.
Well, I think that's why we're mid-range in the euro. You can see it
Yeah,
right between 117 and 116.
yeah.
And I'm sorry, Ryan was piping in here, so
Go
I don't
ahead,
know.
buddy.
What do you think, buddy?
Go
No, just
ahead,
saying
Asian boy.
it comes back to the credibility thing, as you say, and what's it going to lead to? You know, if it leads to a court case, you know, obviously we got this. She's got this mortgage stuff hanging over her, which might be grounds for action anyway. But if he fires her before that all happens and it all goes to court and it's proven that he can fire Fed members, then the market's going to take a very sour view to that, because it's effectively any president can fire anyone at the Fed any time, and that's a big can of worms that once opened, you lot will struggle to close. So it's
Maybe
got
that's
lots of
how we get
connotation.
our. Maybe that's how we get our last wave down in the dollar on an event like that she resigns, and we trade back down towards. Really, this is the line in the bull bear line for most dollar bulls is right here, 97.10. So maybe we get one more trip down if she does relent and leave, but it doesn't sound like it. He says he
No.
has some dirt on her about a second home that she listed as a primary home because you get a lower interest rate on the mortgage on a first home than on a vacation home.
If
So
she's
that
been up if she's been up to shenanigans and it gets found out and she's forced to resign, that's a different kettle of fish. If she's under investigation and Trump fires her and it goes to court and the court upholds his firing, that's a completely different ball game. You probably
right,
won't blink at your 97 level in the Dixie. You'll probably be trading 95s at the first blink, because it's just done.
yeah,
He's just one court case has undermined the whole of the Fed's independence. I
yeah,
mean, because you had Rosengren and Kaplan trading while they were Fed heads, and they got a slap on the wrist, and no one batted an eyelid, and no one
yeah.
will bat an
What?
eyelid if she resigns because she's messed around with mortgages.
Yeah, yeah.
And
I
that
mean,
was
the
before
Fed.
she was even a Fed governor, by the way.
Doesn't
So
matter. That doesn't
I
matter.
know. I'm just saying. I'm just
Yeah.
saying.
What a time to be in public service.
What a time to be in the markets.
What a time to be alive.
What a time to be alive.
Politics, eh, Dale?
What?
Makes you want to go into politics, eh?
I'm thinking of making a run. Mayor of RVville. Anyway, what's really got your attention this morning, Ryan? Europound put in kind of a negative day, still constructive there. There's a nice candle.
Yeah.
Okay.
I'm still constructive while it's above 85.90, 8600. But that failure that you've got there yesterday and pretty much all last week was right at the top of my zone,
Yeah.
86.70. And the bottom of my zone is at 86.45. And look where we can't get through over the last few hours. So that keeps it bearish, and keeps the possibility of a break below that 85.90 firmly in place, because it's still looking short-term bearish off of those two prior highs, 87.40, 50. So I'm happy to be long, but yeah, I'm not out the woods and not feeling overly confident at this moment.
As far as range trading, like Kman's been talking about, boy, have you had some nice range trades between 47 and 48 within a night. Okay. So, I mean, we came down here after last night and then bounced all the way back. And then there's been 3 range trades. Did you trade that range? Is that what you're talking about doing, Kman? You have a range like 47, 48.
I didn't trade the dollar yen range because that's still very much affected by all the yen crosses. But I had via my option I could trade a part of the euro dollar range, which is still holding very well. 116, 117.30, 115.80 on the downside. You got 150, 160 points to play in, and that's what happens now, regardless of
116, 117 and a half. Okay.
Yeah, something
So you
there.
think we're going to make a new trip up here?
Well, you know what? I was just thinking about it at the start of phase. I said, You can. Yesterday, people were trying to sell the dollar range, the dollar rips, thinking after Powell, and they got it around their proverbial backside, and now probably everybody is going to try and buy dollar dips and get it around the lederhosen as well. So there is a chance we make it up there, but it's really we are stabilizing here. That's what I said as well on my morning updates in the room. There's a possibility 116.60 we stabilize around here for a while, and then we see what's going to happen. And data should tell us as well, besides politics, obviously. But the politics, look at what happened. Because you had the Cook thing, which made the dollar come down, euro dollar rally, and now it's stabilizing. Then you had Trump threatening to slap sanctions on European countries, which brought it to the lower end of the range, and the range is holding. So politics do one thing. I think data will matter, and not specifically today's data, although we have the consumer confidence coming out, which is a good one to watch. But yeah, especially what's going to happen on the job side, of course, of things. But yeah, we need to see what data are going to bring. In the meantime, I would really not exclude that we are going to remain in those ranges and probably do top and bottoms on a Truth Social post uh, in the meantime. But are the longer termers really involved in this? I'm not sure.
When I look at this, this high and confirmed high was made on July 1st, so it's almost been 2 months
Hmm.
of this. And, this was a confirmed high. We're only, I don't know, 170 pips away from taking it out. So you just think about it. People say, well, how do you know where the stops are? So you think about it. So you sold it up here. You're okay. It didn't get your stop on this rally. It so now you could move your stop here, and now it hasn't gotten this stop here. I think there's some unfinished business that there could be a stop hunt over
Hmm.
38.30 before we mark a final high. So
Yeah, that's possible. But yeah, in the meantime, break the range first. Huh?
yeah, so the range will be broken on the upside at what, 1740? Is that what you're
Yeah,
calling
40,
the top of the range?
40, 50, and then it's probably going to make a run for 118 or 118.30.
Uh, Canada looks kind of weak. It had one of the weakest recoveries of, looks like a flag to me. Looks like it could break down to 37.50, which means Aussie could have a run here. This looks like a flag. And yesterday, remember, we were talking about how well Aussie was holding up compared to
Hmm.
everything else. And it took a lot of dollar strength just to get a retest of these lows here. I
Yeah,
think Aussie looks pretty good here. You
Aussie looks
probably
better. Also on the crosses, Aussie looks pretty good.
okay,
That's a fact. Yeah.
okay. And I want you to tell us if we're going to break out in gold today.
Today, as I said on the flow show, ranges are there to be respected. 33.80 goes above, probably going to have a look at that little spike 86, but then we need to build on 33.80, 33.
Right.
We need to build on it. And yeah, I think if politics come into play with what we know from Powell, yeah, the better one of the two between gold and silver may be gold for a while because the as a hedge against stupid politics. Yeah, I think we can because I'm still a little long gold. I think we can go, especially that the night move or the late move yesterday held in the 33.50s. So in gold,
Yeah.
that's encouraging for me.
That came in after the U.S. closed this spike
Mm,
down here, right?
yeah,
And they bought it in Asia, right?
yeah, it was a quick down and back up. Yeah.
Yeah. Okay,
That
so
looks good.
380, you think platinum looks good?
I don't trade platinum, but
Oh,
it
I thought you said that. I thought you said
no.
platinum looks good. Anyway, I'd like to see a breakout, not just for the advance, but then to have a new demarcation line of what gold's
Mm,
going to have to hold to have a continuation move.
yeah.
Okay, we get 3380 breakout, and it goes to 3420. If it comes back under 3380, that would make the whole rally suspect. So, um, I think we covered a lot here. Anyone want to comment on risk? We had here we've given up about half of Friday's gains. Are we going to give them all up? What do you think, Ryan?
Probably not.
Okay.
We've had the data, apart from the jobs data, the other data showing us that the Fed shouldn't be in a rush to cut rates, and then we get Powell, and it doesn't matter what we come through, stocks just keep making all-time highs. So could we get a pullback? Absolutely. If we see a bit of better data, we've got durable goods today, consumer confidence, if that's both good, then that probably reduce odds for September again, and you might see stocks coming down. But then if the consumer's doing really well, and there's lots of durable orders, goods orders, that's good for stocks as well. So
Okay.
no, buy the pullback.
I'm still waiting for see if we get 65-20. You'll have nice divergences here. No one's really talking about the underperformance of the NAS 100 compared to the S&Ps. This is pretty big underperformance, and it
Yeah, but
wasn't
Dow
happening.
and Russell are doing better as well, right?
What's that?
Dow and
Dow and
Russell are
Russell.
doing better than the
Yeah,
Nasdaq as well. Right?
yeah. So
Looks
they're
like a bit of
rotating.
rebalancing ahead of the Nvidia data, Nvidia results tomorrow, right?
Yeah, and here's Nvidia.
It's tomorrow, right?
Yeah,
Maybe we'll get some clarity on the Nasdaq tomorrow.
yeah, maybe. Okay. Corn still looking okay. Wheat looking better. Beans, the bottom's in. Okay, so grains. I just think these grains that people say, Dale, why? Someone asked me, why do you even watch the grains? Well, you could ask Peter Brand why he pays attention to the grains. He used to trade them at the CBOT. He claims, besides currencies, they're one of the better trending markets. Once you get a trend going, they're very good technical markets. They've been trading grains a lot longer than they've been trading S&Ps. And I'll rest my case. So pay attention to grains. And also, if inflation is going to be a problem, was already becoming a problem, and that's with grains near lows. Okay. They've been creamed since the Ukraine war. So there's beans, there's wheat. Look at where it was. It's 13 a barrel. A bushel. Corn was $8. Now it's half. It's at 4. So if we're having inflationary issues with food, when the grains are in the toilet, what's going to happen if we have a bull run in the price of grains? So grains are going to be meaningful even if you're a bond trader, right? So that's why I watch them, and they're pretty good trading markets too. So Blake, where's your head at in risk? Still patient, wait for your numbers.
Where's my head at? Well, my head's at I'm gonna see, like what Kman said a little bit earlier. I'm gonna see where we get in, where this data is going to take us. I think everybody's still waiting for PCE. I mean, equities, you look at the SPOOs. I mean, we're just sitting up here at the highs. I keep, I think I pointed, maybe I should just grab the chart really quick if you don't mind. When we were talking about the S&P, the level that we've been really focused on, as you know, is the 65-25 level. And the reason why, it's because that would be the completion of wave 5. At least I think it is. The 127% extension. So we get up towards 65.50, 65.25. I'm looking at that level, and I don't want to get on the short side just yet because I still think there's some risks higher, and they could be from, from Trump at any day and any moment could announce his next pick for the Fed chair, and if it's uh, anybody who's extremely dovish, I mean that could send us reeling higher. So I don't want to just stand in front of the train. I think that somewhere up here is a level that I want to be on the short side, but I'm going to start looking for things that are that suggest a reversal, which would be like a false breakout, maybe some sort of intraday really wild blow off top, which Dale, would be something to the effect of
Yeah.
a 5% ripper intraday higher, and then we end up the day lower. Something like that would suggest a big top is in. But I am looking for clues up here, and I haven't figured out what it is that I'm looking for. And that's something that I spent a lot of time talking about on the week ahead video is that on last Friday. I am searching for a place to be on the short side up here, but I'm not willing just to stick my neck out and do it. I have to see price show me intraday
Yeah.
that a reversal is coming, and I want to, and then ultimately to get aggressive, I want to see lower lows and lower highs, which takes time to develop. It's not something that's going to happen overnight. Um, and I have to also think about, Dale, this is the last week of summer for most people. I mean,
Yeah.
there's still a lot of Europeans that are out. Volatility is still low. When volatility is low and volumes are down, the propensity for the market to go higher is high. There's more of a risk of upside probes. You still have so many Americans that are on holiday throughout this week, waiting, to celebrate the Labor Day weekend, which by the way, we are not broadcasting on Monday. The only person is broadcasting is Dale on Ryan's show. Dale's getting up extra early to be on the Flow show on Labor Day. Just kidding, Dale. Just kidding.
We'd welcome him with open arms.
Yeah, that will be. We will not be broadcasting this show, the Morning Edge or the Daily Roundup, our U.S. based shows. But I know Ryan and Kman are going to be around on Monday, holding down the fort. But anyway, I just wanted to say that just to make sure I got that out there. But yeah, I don't know, Dale. I'm. Those are the levels I'm looking at. I mean, how about you?
Yeah, I'm waiting for one more high.
Yeah,
I
mean,
that one more high would give us a 3.
see, I
Right?
see.
So
I don't
you
know.
count.
Go ahead.
Oh well, if you show that chart again, and yeah, okay. So
I
no,
mean,
don't
look
scratch
at where
it.
channel resistance would take us, Dale. It would take us towards
66.
6,800.
Yeah,
I mean, that's
the
long-term
spot.
channel resistance comes in up there at 6,800. So yeah, I mean, I am looking at 65.50, but like I said, what's to stop us making a 300 point S&P run higher on some, you know, Ryan's new favorite Fed chair candidate, Zervos from Jefferies. Let's say he gets the nod. I mean, the market probably go berserko. The market would probably rally 300-400 points, going, "Oh my God, this guy is the most dovish dude that Trump could possibly put in." And the stock market would say we need to be long, and you would see S&Ps at 6,800 probably on that announcement. Now, again, I'm just trying to think outside of the box, not saying that that's what's going to happen. I'm just trying to think, what are the possibilities? What could drive us up there?
Um, I think we're through earnings season, right?
Minus
most part.
Nvidia.
Yeah, after
Well,
that.
we got Nvidia, we got CrowdStrike, we got Dell. I think we have Dell. We have probably Nvidia, Snow. Most important company for Ryan to be looking at is Ulta. makeup and women's
Oh,
stuff,
yeah. It's a
right?
Miss Schneider stock.
Just kidding.
Yeah.
Just kidding. Anyway, yeah, I mean, there's Nvidia obviously after the close is going to be a big deal. Maybe Nvidia just blows out earnings and, next thing you know, the S&P is up 100 points because Nvidia is up, 15%. I mean, that's entirely possible. Hey, I want to ask you guys this, and I'm gonna Ryan, we got some data today, finally. We got some data that might move the needle. Tomorrow is going to be kind of a slower day for data, and then obviously we'll come into preliminary GDP, unemployment claims. So we got some retail or some housing data coming in on Thursday. Tomorrow's going to be kind of slow. But today we have consumer confidence. We have durable goods in 5 minutes. We have Richmond Manufacturing Index. Any data you're looking at and anything that's going to move the needle for you on what you want to do with currencies?
Yeah, I think you've got to look at this data, the durable goods and the consumer confidence. We had seen a bit of a bounce back in consumer confidence numbers, but as we saw from the Michigan, that 2-month bounce then got knocked back in the last reading. So it's all important data now because the market's still wondering what's going to happen at the set meeting. PC on Friday might be a bit of a damp squib because everyone guesses what the number is now after CPI and PPI. They'll do their little calculations to guess the number. But yeah, we're back on the data. But I think this Cook-Trump stuff is going to obviously keep bubbling today, and we'll see what happens with that as well.
All right, Kman, what are you looking at today as far as data goes, and what are you looking to trade? The thing about, I guess, when you have markets like this that are very quiet and they're kind of data, I mean, we're yearning for some headlines. What do you think the market's going to focus on today?
Consumer confidence and perhaps the combination of those housing things. It's not something that I've been really paying attention to because they haven't moved any markets for any length of time in the past, or in at least over the last years. But they may finally start to show up, showing something at least. Durable goods, yeah, usually they don't move anything at all. And it's July data as well. So, yeah, I think the major one for me is the consumer confidence today.
All right. Yeah, and AJ points out we also have some earnings from some retailers. Yeah, we have Best Buy and Dick's Sporting Goods and Kohl's, and yeah, we do have some retailers today. We have Alibaba on Friday, which is actually I think that's going to be an interesting Chinese company to be looking at on Friday as well. I'm waiting for just kind of like yesterday. Today I'm going to be looking at you know, which side of the range are we going to be on? And am I willing to fade it? Depends on why we got there and how quickly we got there. So, if the euro gets back down to 116 like it did yesterday, would I be on the long side? Again, it depends why that it gets there. And if it gets up to 117.30, am I willing to sell it? The reasons why are also going to be very important. Kman, you said something on the Flow Show today. Because I did listen to part of it, I couldn't listen to the whole thing today, just due to a meeting. But you said something that was important. You'd rather see markets make the move on data rather than politics, and politics is playing a part in the data that we're getting. But do you want to talk a little bit about that while I get set up here?
Well, that's what I said earlier. I think if you look at the politic headlines, of course, I mean, the Fed is never good. But then if you look at the other side of it, he's threatening to slap sanctions on Europe, which had an impact yesterday. But the political headlines last for hours. Data can last for days, weeks, months,
Yeah.
Especially with Trump, we need to be ready to have opposing political headlines. So I'd rather have moves be decided by the data. With the political, the geopolitical, everything is still there. It's not going away. But in to really see the moves develop, and I really think that the longer termers are looking at similar things. Is that we really
Better
should
than expected.
be
Durable, sorry,
guided
better
by
than
the
expected
data. A bit
durables.
better than expected. The durables coming out there.
Oh,
Uh,
doesn't
yeah,
seem like it's moving the needle much.
yeah, exactly.
I think probably people are more worried about these headlines, political headlines. Yeah.
Short term at
So,
least. Yeah.
anyway, I'm sorry, Kman, if you wanted to go ahead and finish
No,
up your
no.
thoughts.
I mean,
Yeah.
I'm done. I've just repeated what I said this morning. I'd rather have it over data than because the political headline, we've seen it, right? You're in the middle of the range. You're in the middle of 116, 117. In the meantime, Trump threatens to fire one of the Fed governors, and he threatens to slap sanctions. It's not even tariffs; it's sanctions on Europe because of the digital tax. I mean, okay, I mean, take the two together. You're in the middle of the range, but data will have the power to move them further. Not data like the ones that we get, like for instance, those durable goods. But I think really going forward, it's especially the jobs data. But then you also add the consumer because it has a direct effect on the consumer, and the Fed is still watching the consumer very closely as well. And perhaps, as I said, start to look at housing data again if they would move in any direction. And then I'm especially thinking about if it starts to weaken.
Yeah, and as you say that, Kman, I want to say about housing data. Um, Dale, what's the name of the young lady that you have on that talks about how?
Melody Wright, and
Yeah, yeah,
like
yeah.
I'm out here in real expensive homes out here in Encinitas, and I'm friends with a lot of guys that own them. And prices are down from peak levels 20% already. Here,
I think that's about the same in our neck of the woods. But
yeah,
she was talking. I was
worse
listening to
than
a
'08.
podcast.
Worse than '08.
Yeah, I was listening to a podcast with her like yesterday or the day before, and she was talking about worse than '08. And I'm like, I'm not in that camp, but that's the kind of stuff that could really, if true or if does happen, it's the kind of stuff that can really wreck the consumerism in the US. That's for sure. People feel a lot less wealthy when their real estate diminishes in value. Anyway, speaking of guests, I know you have a guest here, but before I let you all go, and one of my favorite technicians is coming up, Rohit from India Charts. He's going to be here with Dale. But I just want to say that if you guys have not taken advantage of the summer sale, make sure you do that. 40% off. Basically $3 a day to be in chat rooms with us all day long. You can know exactly when I bought, when I sold the euro multiple times yesterday. You also, we have the trader funding program, instant funding, 30% off our instant funding right now, and one-step assessment, the simple one-step assessment, which is the more affordable approach. So if you want to get funded, this is the week to do it, so you can be prepared for the volatility that we're going to have starting next week. Because next week, shit's going to get real. It's going to be bonkers crazy, and I'm literally so excited for September, October, November trading. I mean, like the type of moves that I think that we're going to have are going to be, year making over the next 3 months. So I'm super excited about the volatility that's coming our way. Hope you guys are too, and take advantage of that with the discounts that we have this week, especially with trader funding. If you need funding, that's the place to do it. You can go right to our website and go to right here where it says trader funding program. Just click on that and it'll get you there. All right, Dale, I'll let you take over with Rohit, but Ryan, Kman, thank you guys for all of your inputs today. It's so valuable. If you guys aren't listening to Ryan and Kman in the morning, you guys should. It sounds like a morning show. You guys should listen to them. And if you're not listening to their show, listen to the recording like I do. First thing I do when I get up in the mornings. So
Okay,
Thanks,
well, thank
guys.
you, Dream Team, Ryan, Kman, Lake. Thank you, guys. And
My pleasure.
good hunting the rest of the day for you guys. Rohit, I'm gonna try it. Srivastava. How was that?
Oh yeah, that's good.
I got it.
Yeah, yeah,
Srivastava.
yes.
I should
The
know it after
A, the
about
A, the A in the A in the end is often silent, so we just say Srivastav.
Oh, stop. Okay, Steve. All right. All right. So after 3, 4, 5 years, I finally can pronounce your last name. So I'm real interested in, is this you? Are you showing this century
No,
chart right here?
no,
That
no,
must be
that's not me.
Blake.
Yeah.
Blake,
Oh
do
yeah,
you
that's
mind?
me. Sorry, I forgot. I'm still
Sorry,
sharing. All right.
that's okay. So what's on the docket, Your Honor?
Oh, India, the Indian market, last few days or last few weeks is getting completely crushed with the tariffs hanging on our head. I think tonight they go live. So that's even hitting the currency, the USD INR.
Okay.
So if nothing changes by midnight today, it will have a big impact on both our currency and equity markets. And day after tomorrow, tomorrow's a holiday in India for a cultural festival.
Okay.
But the
So
setup in India is bad, and in that light, we're trying to figure out where we stand in the world because we've underperformed global markets that have done well since June, July.
yeah.
But I do think that uh, the US is in late stages of the April rally. At least that much is there, but it's not clearly reversed yet, as you all were discussing. But one chart which is really bothering me as the starting point, we always want to go back to the currency, and that's the DXY. So I've put that up.
Okay.
I think since 2015, I've been looking for when we'll get the next dollar bear market, and which would trigger the commodity cycle. And while we got a glimpse of that in 21, 22, we are not getting somehow with all these moves, we are not ending up with the typical dollar bear market that we used to get in previous cycles like
So
2000.
you're coming around to this could be a bullish structure, that this is maybe a wave four or something, an ABC ending it here soon and then
You
heading higher.
you read my chart already.
Yeah, okay. Well, that, you almost have equality, right, between where you have Z
Yes,
and A and
yes,
B and C. Maybe it's 100 points
yeah.
difference.
But this
So,
ABC, this last ABC is forcing me to think that this can be wrong and something else is going on. Because if we hold this and we take off, then we have another problem.
right. And
I
the
mean, of course,
problem is,
for traders,
pro
it's an opportunity, but you know what I
yeah,
mean.
maybe the problem is a weak economy with some deflation
Yeah, the
taking
deflation.
place, or how about how's that peace process going between Moscow and Ukraine? That could be part of
Yeah,
it too. Martin Armstrong, who has this pie, he has a program. He's talking about war cycles peaking. They're starting to
mhm,
peak. So the worst always happens at the peak, right near the
yeah.
end. It's like the parabolic stage of a market. Anything brewing between India and Pakistan that could flare up again?
Doesn't look like at this moment. I mean,
Okay,
the if I just go by the classic socionomics theory that Rector put out on wars and social events, it's basically when you're in wave C of a bear market is when all that shows up.
okay,
So then we are not in wave C of a bear market yet at cycle degree anywhere
okay,
for geopolitical risk war to really escalate to that degree. In fact, the
okay.
chances are that at the end of a bull run, we actually end up having peace treaties, so
Oh
that's the
yeah,
interesting part.
yeah. That could be so. Okay, but what would the discount imply if it's right? And
So
we bottom,
one thing it surely implies is what you said, that is there a deflationary shock in the offing? So far, what we have seen is only oil prices remaining down, and I've been hoping that, well, if gold is going up, silver is going up, somewhere copper will pick up,
yeah,
somewhere, you know, the rest of the commodity complex picks up, but that's not happening across the board except for copper. None of the other base metals are really moving. And even when I look at copper, the chart is pretty concerning because multiple attempts to really move up out here
yeah,
have not worked out.
yeah,
I would have thought that this triangle is a long-term fourth, and then this is like a one and a two. But now it's
yeah.
beginning to look like an ending pattern, and I'm really thinking, can we really end something here? I mean, I don't know. Or if it's still a two, then then it's got an A, B, C, some risk
Yeah.
that shows up now,
Okay.
and then this spreads to everything else, right? Even in gold and silver, if we actually go to the quarterly charts, we go a little longer term, then let me remove this. Then we do have some kind of a five-way structure. We have one, two, we have three and four, and then we have one, two, three, four, and a fifth going on. It is not reversed yet. But can this one five-wave sequence really complete? So
Okay.
you could complete this sequence. It may not change anything on a 10-year basis, but surely it means that if you complete five, you could have a much longer, corrective or consolidation phase here.
Okay. So
For
it looks like it's all about the dollar again,
So it's all about the dollar.
like it always has been, hasn't it?
Yeah. And it's surprising because this is at the point where we are talking about cutting interest rates and so on, which typically should be dollar bearish, but we are sitting at the bottom of wave C. It makes no sense.
I heard a story also on that Armstrong interview that the U.S. government's considering coming out with a $500 bill and maybe 1,000, and we haven't. For some reason, that was going to be very bullish a dollar. I didn't understand exactly the narrative, but uh, he's very bearish Europe. Okay, um, he doesn't think there'll be peace. The Europeans are actually pushing for this conflict with Russia. So it could also be the dollar's good because of geo stuff and being an ocean away from the threats on in Europe. Could that be part of it? War?
Hmm.
I mean, how's this peace process going since Alaska? I don't. I mean, I see it. That's the war escalating.
So I just end up opening European charts to figure this out.
Yeah,
And if I look at, say, the Euro stocks,
yeah, they look good.
it broke. Yeah, it actually looks good because it broke out of this long phase, just as
Right.
Japan did earlier. So many of the markets outside of the US have actually uh,
Look better.
look much better. They're really coming out of something. And that's what doesn't look like this is a war issue. Uh,
Okay.
so it's got to be something else that we are missing. What is the deflation? What is the cause of a deflationary shock here?
Well, then it's got there's deflationary moves in recessions,
Yeah, yeah,
right?
that's what it could mostly be. And it
Yeah.
could be maybe more US centric. Is it possible that other parts of the world can scrape through by spending more? So that means Europe is spending more, China is spending more, maybe India also ends up spending more, while the US is actually pulling back on its spending. And maybe that is what we are looking at.
Okay. So let's see what's your prognostication for the Nifty. Let's see what it's been doing and what you're telling subscribers.
Yeah. So I'll just take a long-term chart of the Nifty. What I'm telling them right now is that the consolidation phase, sorry, just a second, that has been going on. I'm putting two options over here. Okay. Uh, So this is a long consolidation going on. We are still not done. We have one final leg down coming, which should play out over the next 1 to 2 months. And the potential tariffs are probably going to play a role in that. But once this consolidation is done, then most probably we should come out of this. Whether this is going to be wave 4 and wave 5, or whether it's going to be wave 1 of 3, 2 of 3, and a much stronger market, that's something that I will leave open to judgment based on maybe other factors if we are able to see growth, etc. But there is one leg, a longer term to the upside, I think still. But before that, over the next month or two, I think we will see the worst case scenario play out shorter term. That is this correction over here.
Yeah. A little
Before we
deeper
really get
for.
higher. Yeah.
So do we have a similar setup in S&Ps today? It almost looks like the S&Ps, they almost rallied to new highs and backed off yesterday. And
So the
NASDAQ is well off the high.
So what I am looking at here, at least from the April bottom, that we are completing a 5-wave move. Okay, so here I'm not going that long term as I went into the Nifty,
Okay.
because it's well, there have been too many extensions, so I have some doubts on the long term count. But at least this part looks like coming to a close. There's just one thing left to see is whether you will, peak out immediately, or you continue to form some kind of a ending pattern over here, A, B, C, D, E, wedge,
Yeah.
before you really come off. So for that, we'll have to give it some time. But once it probably breaks this range, maybe it breaks, say, 6,300, then the odds that we've completed the move would significantly increase. In which case, then we'll actually switch to looking at weekly and monthly indicators. So my weekly momentum indicator here is still not crossed over to the sell. But on the
Yeah.
monthly, we are at the upper band. We are having a negative divergence develop on the momentum. And
Yeah.
I think there are two possibilities. Either this correction pulls back to the midway, that is the near the 20-month average, which is at around 56 or 5,700, let's say.
Yeah, there's a gap there too,
Yeah.
Rohit.
Okay.
Yeah.
And my worst case would be, if there's a further shakeout, would be closer to 52, 5,300.
Okay, I'll go with 56. And then we get wave 5.
And
to
then
the
we get the
upside.
next move, yeah.
Okay. Any view on natural gas has been real cheap? Are you starting to get tempted? Are we completing anything there? The
Watching it,
Widowmaker?
yeah, I'm watching it closely. I think a couple of attempts to call the low have actually not worked out. So
Right.
I did think we were done here. That didn't happen.
Yeah.
So now that we've broken this, we are simply waiting as to either it needs to get past this range, or it could continue to keep stretching to the bottom end of this channel. So nothing 100% here yet.
Okay. Where are you at on bonds? TLT or the 10-year? What
So
kind of
on
count are you
bonds,
working?
I think there is, and this has been my view for a long time now, that I think bond yields are going to come down a lot.
A lot.
It may not have
Yeah.
happened yet. So I like
Mhm.
more than bond yields. I like to actually look at the bond chart, the price, the underlying.
Yeah.
So I'll just open that. Should make more sense. You can actually go to the 10-year or the 30-year. 30-year. So on the 30-year, I mean, somewhere I can see that we may be ending 5. We've either ended it here. Okay. And we have started an A, a B, and we are looking at wave C developing to retrace a good portion of this fall. If minimum going back to the 4th wave, which is somewhere here. And if we are able to do more, we'll see. But at least this much of a bounce back in bond yields before maybe another 5-wave decline later on. So it's been a long wait. Most of the monthly momentum indicators, if I actually look at that, have all been bullish. Sorry. So the monthly momentum has been positive. The quarterly momentum, it's just that we haven't really seen a pickup in prices yet. But I do think that at some point of time that's going to happen. So it's just testing our patience. But it should get past these averages and head to this high. So now if I extrapolate that to the bond yield, what would that mean? I mean, the fourth wave here is somewhere at around 3.1, or this one is at around 2.64, somewhere in that range, 3.1 to 2.64 is what I'm thinking.
Okay, let's put this together. Lower rates, higher dollar, which is counterintuitive, and a correction in risk.
Could we then only be talking about a potential recession risk?
Yeah.
So
that they begin to start pricing that in. Maybe we're already in one.
a lot of data is already showing we are in one, but markets are not responding. So I actually had to go and look at the yield curve and see where did the yield curve actually fail. So for some time, I found that there was a failure that used to happen at around 0.67. This is the 10 and 2s. So there were a couple of occasions like 94, you had a recession, but you didn't have a very big stock market crash. It was there, I mean, a good 20-30%, but nothing bigger than that.
Yeah.
And then the yield curves continued to steepen and the market also recovered. So these are a couple of phases. It also happened around COVID, right? Same thing.
Yeah.
Once we crossed the 0.66 line, the market had already bottomed and started to recover. Now we've hit 0.6 sometime in May, and we are hovering below it. So this is the judgment point. Like either, and that time market did correct, right? It had fallen in April and it started to recover. So I started to wonder whether the same has already started to repeat, which means the steepening is not accompanied by a further sell-off, or alternately, we actually end up in a recession. So I think we're at a decisive point as to which one is going to happen.
Okay.
Even if we do fall to 60, what we just saw 5700, I mean 5700, that won't be an outright. I'm not sure if that would be an outright recession. It might just end up being
growth scare.
Yeah, a growth scare.
Okay. Well, just another scare. We have plenty of them. Any view?
So there is a good case out of this. If we just go back to the dollar.
Okay. Yeah.
What if it's not fourth wave ABC? It's just this is C1, and you do a C2, and then you do a C3.
That could happen.
Yeah, which could basically that would be the point where you're really cutting rates, buying bonds or whatever. I don't know what
and the
else.
Dollar really getting hit. Yeah.
And that would trigger the commodity cycle, which has been a long wait. Because if I actually look at the Bloomberg Commodity Index, so let's just go that it's like oil prices waiting for wave 2 to complete and wave 3 to start. Right? Since COVID, we've had wave 1. It's just that wave 3 has not managed to show up. So here, this Bloomberg Commodity Index after the previous bear market, which is this WXYXZ.
Yeah.
We've done wave 1. We've just not started wave 3. So are we still in 2? And I think that's where if oil hits $55, that's the Russia-Ukraine solution. Can we really trigger wave 3 with a falling dollar? So this is the bullish scenario that this deflationary shock might just be a temporary sell-off, which will just help us complete the second wave for the Bloomberg Commodity Index. It won't be an outright.
That.
Yeah, so this will be just a knee-jerk reaction. And
it's a great look.
And that fits with the idea that European markets are all breaking out and they're not really going to collapse now. So
so here we are nearing the end of summer. The thing that you have most conviction about going into the fall?
The DXY at 102, 101, 102.
Okay. So, and that's a bear market rally, and then the next wave is 85.
Yeah.
Something like that, huh?
Yeah.
All right. All right, and why don't you show people where, they can get in touch with you, follow your work, get involved with you, or if you want to show one more chart, that's fine
Yeah,
too.
so in indiacharts.com, that's where I publish most of my analysis across.
Yeah, a lot of instruments and a lot. You offer a lot. Are you still there? I lost Rohit.
Should
Oh, here he is.
consider
Okay.
the strike money platform. So that's
Oh,
that's
okay.
where they get the data.
Okay. Any deal for people to see on Face today?
Oh, we do have a deal on indiacharts.com running for this month,
Okay,
where they
there you go.
can get 25% off on a 2-year subscription.
Okay. All right. I love Rohit's stuff. What else could I say? When he comes in, because we talk about options of what things can do. There's always a bull case and a bear case, and does a great job of presenting both, and then not afraid to say which narrative he's has more belief in. So, Rohit, I want to thank you for the years you've been coming here and
Thank you so much.
edifying our F.A.C.E community, buddy. And I hope you have a great fall season and the rest of the summer. And we'll be talking in November. We'll probably be looking at, for sure, different charts than we are today.
Yeah,
I can
probably.
guarantee that the charts will look different in November than they look on August 26th. How's that for a guarantee?
Yeah,
I
definitely.
I guarantee change. Okay? Get used to it. Change. It's permanent. Anyway, thank you, my trading warrior brother.
Pleasure.
Appreciate
Thank you so much for having me.
appreciate your work, buddy. So follow Rohit at the minimum on X at India Charts and go to his website, check it out. He certainly isn't going to hurt you with we're all captains of our own ship, right? So anyone takes their ship into the rocks, it was their decision. They clicked the mouse. And remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. And I guess it's tomorrow afternoon, NVIDIA. Just like Moses came down from the mountain last Friday, tomorrow we have another angelic figure, NVIDIA. Fade strength. That's what I'm thinking of doing tomorrow. All right, everyone, have a great day. See everyone tomorrow. Thanks once more, Rohit. Appreciate it. I'll get a hold of you for our November date. Okay, buddy? Have a great day trading, everybody. See ya. You're welcome, Maroon. You're welcome, Golda.